As I sit here right now, I'm currently up over $175,000 on the day. How did I make that money? I made that money by day trading. I traded this morning for about 3 hours. And you might think that in order to make that kind of money, I had to take an obscene amount of risk. In fact, you want to know how much I was risking on my first trade? 1,300 bucks. That was it. I came into the day today at zero. My P&L was zero. I didn't have any trades I was carrying in from the previous day because as a day trader, I'm all cash at night. So I'm coming into the day, my P&L is at zero, and on my first trade, I employ an icebreaker strategy. I want to break the ice and get comfortable, start to warm up, kind of dip my toe in the water and get a sense of, is the market today conducive for my strategy? So on that first trade, I took $1,300 of risk and I made about $10,000. At that point, I knew the market was hot. And in fact, what I was trading was something that I had on my watch list from yesterday. I already knew yesterday this was something worth watching for a few very important reasons. So while some people, when they make $175,000, might go spend the rest of the day popping bottles of champagne and sitting by the pool, for me, this is just really another day at the office, another day of trading. This isn't a day that is going to change my life. I'm not going to retire. I'm not going to do anything differently. This is a day where I did well. I performed better than I expected, but I'm going to spend this afternoon giving back. I'm going to spend this afternoon teaching you my day trading strategy. And what I'm going to do is I'm going to break it down into 7 simple, easy to follow, and easy to understand steps that you can implement in your own trading starting today. But I want to tell you something at the beginning of this episode. I want you to know that trading is risky. You probably knew I was going to say that because I say it all the time. For those of you guys who are brand new to this channel, let me introduce myself. My name is Ross Cameron. I'm a full-time trader, and I funded my first account in 2001. So I've traded in the market for a long time. I've been through a lot of ups and I've been through a lot of downs. For me, it took years before I became a consistently profitable trader. I struggled big time. And one of the reasons I struggled was because I didn't have anyone I could look up to. I didn't have anyone that I could learn from. I didn't have someone like me. There wasn't someone like me putting out this type of content on YouTube when I got started. It just wasn't there. So anyone learning to trade in the early 2000s, for the most part, well, you were on your own. And how do you learn when you're totally on your own? Trial and error, a little bit of this, a little bit of that, and that's exactly what I did. And you know what? That's the leading cause of failure. Doing a little of this, a little of that, shooting from the hip with no strategy. This isn't a market where you can do that. You get wiped out before you know it. Now, the second leading cause of failure is a trader learns a strategy, but is unable to have the discipline to follow the rules. And that's something that I do worry about for you. And so I'm going to ask you something. As I share with you that trading is risky, I want you to respect that risk. And I want you to practice this strategy that I'm going to teach you right here today in a simulator before you ever put real money on the line. If you cannot make money in a sim, you have no business putting real money in the market. So if you can make that commitment to me, then let's go ahead and dive into today's episode. Now, for those of you guys who are at the channel for the first time, I hope you hit that thumbs up. I hope you subscribe. Those of you guys coming back, you know that we're about to dive into a full-length training. So I hope you hit that thumbs up button and let's go ahead and jump onto the screen share. This is my day trading strategy. And in today's episode, I'm going to teach you how I made $175,000 in 3 hours with only $1,300 of initial risk. I know that's pretty wild, and I feel really grateful. As I said, there's a lot of people who would make this kind of money and would spend the rest of the day, drinking champagne or this and that. And for me, I really want to send the ladder back down. I'm so grateful that I got to this place in my career, and I haven't lost sight of the fact that it could have easily not happened for me. And I could have been another statistic of a failed trader. And so I'm grateful. I have a lot of gratitude for my success, and I want to send the ladder back down. Now, if you notice, this is the stock that I traded today. And you could see this is the leading percentage gainer in the entire market. Now, the strategy that I trade, I apply to the US stock market, trading NASDAQ, New York Stock Exchange, and American Stock Exchange listed companies. However, there are traders that implement a very similar strategy to other markets, including crypto markets and even futures markets. The strategy that I trade at its heart is a momentum-based strategy. So what is momentum trading? Well, momentum trading essentially is when you're looking for something that is moving higher and you're looking for an opportunity to get in. So where would be good places to buy something moving higher like this? Maybe down here, or down here. Now, of course, if you bought it way up here, you may have the good fortune that you hold sideways for a little bit and then it goes higher, and it'll probably be okay, which is why momentum trading is a little bit more forgiving than the inverse. What is the inverse? The inverse is counter trend trading, where something is selling off and you start buying it and it sells off more, and you buy more and it sells off more. And what you're hoping will happen is it reverses off the low. But if you're in too early, you're trading against the trend. You're trying to predict the reversal. You know, there's been people who've been trying to predict the reversal of the S&P 500 for a long time, and the S&P 500 keeps going higher. So they're shorting into strength. And essentially, you're betting against the entire market when you're doing that. You're betting against what everyone else thinks is happening. And it's very difficult to be a counter trend trader. So being a momentum trader means looking for something that currently has strength and is trending, and looking for the lowest risk places to get in. And so for me today, this stock that I traded, which is SBET, you could see it right here on my chart, this was the leading percentage gainer in the entire US market. As we sit here right now, it currently has 44 million shares of volume and is up over 500%. It peaked this morning or early this afternoon at about, might have been just shy of 700%, which is really unbelievable. Just a fantastic move. So let's start first with breaking down the 7 steps I'm going to teach you today. I'm going to teach you how I find stocks in real time, how I analyze them from a fundamental analysis perspective, how I implement risk management to reduce how much I'm willing to risk while still maximizing what I can make, my approach when it comes to technical analysis, especially in regards to candlestick charts. Step 5, how I execute buy and sell orders. Step 6, how I analyze my trading metrics. And step 7, how I'm able to scale my trading. So we're going to start with step 1, how to find these big moves. And right here, you'll see SBET on the chart. And at that point, it was up 77% on the day. It was not yet up 500% on the day. It was at about $11 a share. Now, this is a stock that I saw from the very beginning of the morning. Now, to put this into context, this is a stock that I was already watching yesterday. I had this on, in fact, I've been watching it for several days. So what I'm looking at here is software called Day Trade Dash. This is software that I've developed. I have a development team that works for me, and we've built out this software. This is software for scanning, charting. It has our chat room and my live audio video broadcast in it. It has a news feed in it. And so my idea when I started building the software was to create the ultimate dashboard for day traders where you would have every tool that you would need right in one place. So as I'm doing this demonstration today, this is the software that I'll be using. Now, when SBET first came to my attention, it was a couple of days ago, and we're looking at the candlestick chart here for the daily. And you could see it started to squeeze up day 1, and it squeezed even higher day 2. So in the previous trading session, it squeezed all the way up to this purple line right here. Now, this purple line right here represents the 200 exponential moving average. It's typically a very well-respected level of resistance for a stock. And so it squeezed up to that level. Now, what was interesting is that there was actually no fresh catalyst. And so that sort of threw me off a little bit. It went up about 70, 80% in the previous trading session, but not with any fresh news. It just kind of kept going a little higher, a little higher, a little higher. And some volume was coming in, which in part is just because the very fact that it was up made it a momentum stock. It was moving. It didn't make sense why it was moving, but it didn't change the fact that it was moving. Now, we got some news today, which might help explain why it was moving in the previous session, but we didn't know that at the time. All we knew was that this was starting to gain momentum. So step number 1, to find these types of stocks in real time, you really have to use a tool. Now, you could be one of those people that if you're using a commission-free broker, you check your email, because some of these brokers will send out a list kind of like this each morning telling you the leading percentage gainers. Why is it that they do that? Well, if you're trading with a commission-free broker, remember, you have no commissions. It's free. So wait, how does the broker make money? They make money on you. You are the product. You are the commodity. So every time you trade, every share you take, every share you trade, they make a little sliver of profit. So they want to encourage you to trade. The more you trade, the more money they'll make. So they're going to encourage you to trade by sending you these email kind of reminders of, hey, these are some of the leading percentage gainers in the market. Hint, hint, go take a look. Hey, maybe take a couple trades. That's how we'll make money. So they're going to encourage you to trade. So you could just rely on emails from brokers, and that would be okay. But what I like to use are these scanners right here, which are giving me the data in real time, telling me right now, in this very moment, what is the leading percentage gainer. So as I was doing my due diligence this morning, I sat down and saw that SBET was our leading gainer already on the morning, up about 77%. So I have 5 criteria that I use to help me evaluate whether or not a stock is worth trading. These are my 5 pillars of stock selection. They are broken down into 2 categories: supply and demand. Let's talk about demand first. So in order for a stock to make a big move, you have to have an imbalance between supply and demand. It's the sort of simple economic philosophy that if there's more demand and there's a limited level of supply, the price will go up. And so in the market, and it doesn't matter whether it's a cryptocurrency or it's a stock, there is a fixed amount of supply. So we'll start with supply. So the fixed amount of supply is the number of shares available to trade. So when a company does an initial public offering, they sell shares onto the open market. So let's say, for instance, a company wants to raise some money. Let's just say, for instance, I want to raise money. I'm going to do an IPO. And I'm going to say, all right, well, I want to raise $50 million. So I'm going to sell 10 million shares. And what do I price it at? $5 a share. 10 million shares, $5 a share, raise 50 million bucks in an IPO. So at that point, how many shares are available to trade of my stock? 10 million. We've got 10 million shares. That's it. That's the total supply. So now from that point forward, with 10 million shares available to trade, if you wanted to take a huge position, if you wanted to buy 8 million shares of this company, well, you could do that, but as you're buying, the price is going to go up because there's only 10 million that are available. And so the more you compete to buy with other traders, the faster the price moves up. But what would typically create that surge in demand? Well, typically that demand would be created by a breaking news catalyst. So all of a sudden a company puts out fantastic news and now everyone wants a piece of it. Now after the news comes out, the stock is going to start seeing a surge in volume. I have a minimum criteria that a stock should have at least 5 times higher volume in order for me to consider trading it. So just to get perspective, what is our relative volume ratio right now? In SBET, it's currently 136. So this is a metric that a lot of people don't look at, but I pay really close attention to. The higher the relative volume, the bigger the moves, generally speaking. So high relative volume is really important. So I look for that high relative volume, and then naturally, if you've got news and you have high relative volume, you're also going to have a significant percentage change. At a minimum, I don't want to trade something if it's not up at least 10%. And this is one of the reasons that you won't see me trading large cap stocks, even big companies like Netflix or Tesla or Nvidia. They rarely could go up 10% in a single day. It's very rare. Whereas small cap companies with fewer shares outstanding, when they have breaking news, these are stocks that can go up 100, 200, 300, or as much as 500% in a single day, as we've seen today. That's especially true when the stocks are lower priced. Lower priced stocks are more popular among retail traders. Now you have to recognize that right now in today's market, we're seeing higher levels of retail trading truly than we've ever seen before. And why is that? It's because the market has never been more accessible than it is today. From your smartphone, you can trade. Technology has advanced so much just in the last decade. So you could trade from your smartphone. You've got great internet service almost everywhere, certainly in the developed countries, but even globally, internet access is better than it ever was. And so not only do you have US residents trading the US market, you have international people from all around the world trading the US market because it's one of the most volatile markets in the world. It's volatile, but it has liquidity, which means you can buy and you can sell on most of these stocks relatively easily. So in order to have big percentage moves, we need an imbalance between supply and demand. So the supply is fixed based on the number of shares available to trade, and the demand comes in typically when we have breaking news. Although there will be times where demand comes in for a somewhat unknown reason. So even if we don't have this element right here of the news catalyst, but the stock has 5 times relative volume, is up 10%, and is in this price range that retail traders prefer because it's more affordable, we'll still see typically a big move. So the second step of this strategy is to understand the catalyst. Step one is to find the stock on the scanner, and the stock should meet all 5 pillars of stock selection, preferably. And step number 2 is to understand what is the catalyst that's driving this higher. Understanding the catalyst is a form of fundamental analysis. So here we're performing a little bit of fundamental analysis, and SBET is on our continuation scanner right down here. So this morning, I had SBET, well, actually, I had SBET on my watch list yesterday. So yesterday, I did my watch list. I uploaded it to YouTube, as I always do. And I said, this is a stock that I'm going to keep on a side chart. I'm not sure that it's going to work. However, it was up, let's see, in the previous trading session, it was up 78% right here with about 5 million shares of volume. Relative volume was 24. So it was well above average, which is great. It was 24 times above average. By the way we calculate relative volume is relative volume measures the average volume over the last 50 days. So whatever is average is a ratio of 1. So every day you're trading on average volume, your ratio is 1 to 1. And if you're trading on 5 times higher volume than your 50-day average, then it's a ratio of 5. So this is trading in the previous session at a ratio of 24, which is already significant for sure. However, the volume, it wasn't the highest we've ever seen. This stock right here had 360 million shares of volume. So that one was actually one that I traded, and it was definitely more popular. But nonetheless, I had it on watch as a possible continuation setup. Now, what ended up happening just this morning was that while I broke the ice on my first trades on it at 7 a.m., it came out with fresh news at 8 a.m. So at 8 a.m., we had fresh news, and that's what created this spike right here from $12 all the way up to a high of $35 a share, over $20 a share straight up. That is absolutely incredible. Now, I've seen some pretty big moves. In fact, the biggest green day I ever had, I was up $475,000 on the day, and I was trading a stock kind of like this that went up. It was absolutely unbelievable. Went up to about $150 a share. It just went straight up and it kept going higher. Now, this was impressive. And today was a solid green day. Definitely one of the top, probably one of my top 20 biggest green days of my career. This is a solid green day here with $175,000. And it's not every day that you see a stock that makes a 20-point move in one candle. But here's the thing that's interesting. I didn't wait to take my first trade for that pop. I had no idea that was going to happen. I had already broken the ice. I was already in the green and had a cushion on the day when this occurred. So let's talk about those first few trades. Those first few trades were based on a strategy that I implement called the micro pullback strategy. What I look for is a stock that's moving up very quickly. So we get a quick squeeze up, kind of like this, and I wait for a little dip just like this. And this helps me understand lower risk, because if I get in right down here, well, it could just go lower. So I don't want to do that. Where would I want to buy? In fact, I want to buy the moment this candle makes the new high right there, because what I'm doing there is I'm kind of getting in at the low point of this curve. Now, if I buy while it's still selling, I don't know how much lower it's going to go. So I don't want to buy while it's still selling. I'd rather let it pull back, and then as it starts to curl back up, that's my entry. So as a trader, I pay really close attention to the areas where the price is changing direction, from going up to going down and from going down to going back up. So the moment that occurs is when this green candle broke the high of this red candle. And that became my first entry on SBET. And that's where I took my first trade. Now I'm going to break that down in a little bit more detail, and I'm going to get it up on the chart so you can see it in just a moment. But let's go back here to talk about this news catalyst that came out at 8 a.m. Obviously, this was a really powerful event. So the news that came out was that they announced a $425 million private placement to initiate an Ethereum treasury strategy. What in the world does that mean? Okay, so let's get some context. This is a small cap stock. In fact, the number of shares as of the last data pull from the filings was 573,000 shares. This is it's a very low float stock. And so if you wanted to buy this entire company of their outstanding shares, it would only be 600,000 shares, rounding up. So 600,000 shares times $6 a share, 6 times 6, $3.6 million. $3.6 million appeared to be the value of the entire outstanding float. Now, a company doesn't necessarily sell all of its shares to the open market, so they may still have shares that are held. So even if you bought that, doesn't mean you would own the entire company. It depends on the structure of the initial offering. But nonetheless, the amount of shares out there is very minimal. So where does this company come up with the money to buy $425 million of Ethereum? Well, they came up with the money through this private placement. And so let's go into the next slide. There's a number of different news catalysts that I focus on pretty closely. A typical news catalyst, a more common one, is trading earnings when a company has an earnings event. So all publicly listed companies have put out earnings quarterly. So we get earnings all the time. And when you have a company that puts out really good earnings, the price can go up very quickly. So I trade earnings catalysts fairly often. I also know that in the small cap world, biotech stocks are especially popular. And so I often am trading clinical trial results and FDA approvals. And we also trade catalysts that include a new contract, especially when it's with like a government agency or a big company like Apple or Tesla that you know is like deep pockets, or with the case of a big company like Walmart or Amazon, where that big company may even eventually just buy out the small company entirely if they really like what they do. Now, when it comes to news factors, there's a few things that can amplify the potential of the headline. And that includes keywords that make use of the current trend in the market. So right now, we're in a trend where cryptocurrency headlines have been really strong. Previously, we've had trends with AI catalysts, COVID catalysts, or biotech sort of typically remains a catalyst. And we've also had hot sectors. So pharmaceutical companies, Chinese companies, AI companies, crypto companies. Recent IPOs, recent special acquisition companies, or recent reverse splits are also multiplying factors. And certainly private placement headlines and crypto treasury headlines in recent months have been multiplying factors. So what is a private placement? A private placement occurs when an institution decides to invest in a publicly held company, a publicly traded company. And by making this large investment, they are issued shares of the company. So if we jump onto the whiteboard here, essentially what happens is we've got a float, which let's just say, for the sake of argument, is 10 million shares. We've got a 10 million share float company. But this company, let's just say they get approached by an institutional investor. An institutional investor comes and says, hello, I would like to invest in your company. And in this particular instance, this company said, I would like to invest $425 million US into your company. And this company says, well, we only have 10 million shares available. And they said, no problem, issue more. So they issue more shares. They issue it was about 62 million more shares at a price of about, I think it was it $5 or $6 a share? It must have been around something around $6 a share, $6.50 a share to get up to 425 million. So all of a sudden, this company has now issued more shares to this institutional investor right here. And the agreement is that they're going to have chairman of the board role. So chairman of the board. So they're now going to be a chairman of the board of directors with a lot of control over this company. And essentially they now own, 6/7 of the company. They own the 6 here, and then there was the one previously of the 10 million in just this example. Now, as it turns out, it's actually even a bigger extreme because the previous float was only 500,000 shares. And so this institution, in a sense, has almost taken ownership and become the controller of a publicly traded company. But they've done this under the specific term that this money is to be used to buy Ethereum, which is essentially a way that this publicly traded company becomes a vehicle for a cryptocurrency, which is a little unusual, but is something that we've been seeing quite a lot recently. So it almost turns the original company into something completely different. Whatever they were doing prior to this is going to be almost meaningless compared to this massive investment. And it comes through this company right here. So typically, a private placement is going to be a pretty bullish catalyst for a company because what it means is that there's an institutional investor that has done their due diligence and has decided they want to take a very large stake in this company. Now, when you think about it for a second, in this particular instance, so I'm going to pull up Day Trade Dash software here again. So in this particular instance, the catalyst here on SBET is this private placement of $425 million. And when we read it, it says the purchase price is about $6.72 for 69 million shares, not 62, my apologies, 69 million shares. So let's think about that for a second. They are now, and it's not finalized, but it's expected to close on May 29th. They'll have 69, this institutional investor will have 69 million shares at, let's just round up, $7 a share. 69 million shares. So every dollar a share that the stock goes up, they're up 69 million bucks. Can you imagine that for just 1 second? So if this goes up $10 a share, they're up $690 million. If it goes up $20 a share, they're up $1.4 billion. It goes up $30 a share, they're up, I mean, these numbers are really obscene. It's just insane. So 1.4 billion, 2.1 billion, 2.8 billion, depending on how high this goes. So they've made so much more than what they would have made on Ethereum. Now, is this institutional investor going to sell? That's what we don't know. And currently, if they want to sell all 69 million shares, currently today, there's only 45 million shares available. So presumably they have not been able to sell any of these shares yet because the offering, the private placement offering is not complete. There's definitely a big question of what's going to happen in the coming weeks. Does this institutional investor with a mark-to-market profit on paper of billions of dollars, do they try to sell? Do they try to do a swap? Do they try to find someone to take some of those shares from them? If they try to sell on the open market, they're going to push the price down very quickly because there won't be enough buyers likely to absorb that level of selling. But there may be other ways that they find where they're able to generate some profit. And we don't know. We may never know ultimately. But nonetheless, this is a significant catalyst for this company, and it resulted, as you can see, in the price going up very quickly. Now, when the news first came out, so when I first was trading this, the very first trade on SBET was way back at 7 in the morning. That was when I first broke the ice with my very first trade. And I'm going to break down that trade for you in a few minutes, but that was right down in this area, right in there. This is on a 10-second chart. But when this news first came out right here, the price popped and then dropped pretty substantially. About 20% it dropped. So we had a fairly substantial drop and then it whipped back up. And so there was a little bit of a knee-jerk reaction from the market where people said, oh, there's an offering. There's an offering. They're selling shares. They're selling 69 million shares. Like, they're selling at $6 a share. But then people realized what the offering was for and how the sale was going through, that it wasn't a sale direct on the open market. It was a private placement. When a sale is directly on the open market, the company is selling the shares straight on the market, and that does push the price down. This is a private placement. It's not going to push the price down. And in fact, all of a sudden, you get this massive squeeze. And I think this is really a short squeeze. And I think there are some shorts that were capitulating on this, which means they were just buying to cover their position at massive losses. Because this thing went up $20 a share in just a couple of minutes. It was about 2 minutes. This is an incredible move. And so in that move right there, I made some pretty big profit. We'll break it down in a second. But let's jump back onto the slide deck. So I think at this time I should share with you my strategy for managing risk, because there's no question that trading is risky. I mean, I want to make that very clear to you. So trading is risky. And what happens for most beginner traders is that they start trading, they fund their account, and what happens when you take your first trade? Well, if you're like me, you take your first trade and you lose money. And how does that make you feel? Sad face, very sad. Maybe there's a tear. Now, for me, it was just one tear. I thought about getting a tear tattoo because I kind of represent, but then someone told me do not do that. So anyways, no tattoos. but you might have a couple tears coming down. So you feel sad. Now, in that moment of feeling sad, what's the best way to go from sad to happy? The best way is to make money, right? To make back what you just lost. So now you feel like I should take more trades. But unfortunately, because you don't know what you're doing and because you're emotionally compromised, that results in losing more money. So now you're losing more money and you're even more angry and you take even more trades. You see where this is going. This is called the death spiral. It's a downward spiral and it's blown out many traders. It's blown out traders that were probably had the potential to be far better than me. But when you get caught in this emotional cycle, it's very hard to escape. It's like quicksand. So as you can see on this slide, it begins with having a poor track record, a history of losing, poor decisions, emotional trading. It leads to poor self-confidence. Now pressure increases. You have desperation that leads to reckless trading, taking more trades without a track record to support it. You just build on the losses, and it's a downward spiral. So how do we break that spiral? Some of you may be in that spiral right now. Today might have been a red day for you, and you're like, I can't believe this. There's other people that are up 6 figures, and I'm sure there's people that made millions today. I'm not one of them, but there's people that have made 7 figures, and here I am. I can't believe it. I'm in the red. So when we think about trading, we have to think about risk versus reward. So if you risk $1 to make $1, you only need to be right 50% of the time in order to break even, right? That makes sense. But if you risk $2 to make only $1, you actually need to be right 67% of the time to break even. And that's setting the bar too high for most beginner traders. And yet this is exactly where most beginner traders are in terms of average winners and average losers. Many traders, including myself when I was getting started, have this tendency of as soon as you have a profit, you get scared of it disappearing. And so you sell. In fact, it's emotionally driven. It's fear. You're afraid of that profit going away. And so you have a tiny profit and you're anxious. And so you sell. You take the profit off the table. So you have small winners. But then you're in a losing trade and it starts going down. It's going down more and more and more and more. And you don't sell. You hold. Why? Because you hope. You have a fear it's going to be a loss. But it's not a loss until you sell. So you have a hope that it'll turn around. And so then you've held it way too long. And now you've got huge losers on average and small winners. And now you need to be right 75, 80% of the time in order to be break even. That's not realistic. Essentially, you've put statistics against you. You've stacked the cards too high. You've made it impossible to succeed. So what if we could flip that? What if we could instead have winners that are 2 times our losers, right? You'd only need to be right 33% of the time to break even. Now, that's easier said than done. In order to, on average, have your winners be double your losers, you need to have a very thoughtful approach to risk management. You need to have a very thoughtful approach to what you're willing to trade every single day. So now we've already discussed my 5 pillars of stock selection. Now let me share something with you here. I'm going to pull up a chart here. This is going to show you my current profit-loss ratio year to date. So my average winners are $2,000 and my average losers are about $840. Now, remember, this is someone who's got a lot of experience trading. It took a long time to get to here. My accuracy is 73%. And so even if you didn't look at the total amount of money I made, you just looked at this relationship of average winners to average losers. With this relationship, as long as I'm right 30% of the time, I will make money. At 70% of the time, I should make really good money. And in this case, it's over $2 million. Now, you might say, Ross, can we bump these numbers up? You know, why not trade with bigger size? Why not increase your size? Why don't you double it? You'll go to $4,000 average winners and $1,600 average losers, and you'll be at $4 million. Well, the goal of every trader is to develop a strategy and to scale it up. It's taken me time to scale it to here. Scaling it another 100% overnight isn't going to happen. But I'm going to keep leaning in, and I'm going to keep working to do that. But what you'll find is that there is a certain point in the market where you get diminishing returns. You can make good money, but you get to a certain point of share size where your size is too heavy. And when you have too much size, it's hard to move in and out of the market easily. And so then you get forced to sort of make a decision, which is to either reduce your share size back down or to look for a different market that you can trade in addition to your current market, which is what some traders do. So when I think about trading, especially for beginners, I think about 3 core components of profitability. You've got your profit to loss ratio, right down here, your average winners, your average losers. And then you've got your accuracy, which are your two important ones. And then those feed in your consistency. So as I sit right now, I'm over 70% accuracy. I'm green 6 out of 6 weeks, and my profit loss ratio is 2-to-1, which has me at professional level, 18. It's actually a perfect score. Now, granted, I did make this, so you could say, well, that was easy. You gave yourself a personal perfect score. However, this really would be a fantastic score for any trader. 2-to-1, 70%, green 6 out of 6 weeks. This is really good. And when I actually took this, made this graph here, this is where I was at. I was at a 1-to-1 ratio, and I was at about 68% accuracy, and I rounded up just a little bit. So my accuracy has gotten better, and my profit loss ratio has gotten better. And that, again, ties back to focusing on quality. So your first element of risk management is to trade A quality stocks. By trading stocks that meet 4 out of the 5 pillars of stock selection at a minimum, invariably you're going to reduce unnecessary losses. These outlier losses, they're sometimes really big, that come from trading low quality stocks. Those are going to be gone. So now your accuracy will improve because you're cutting out some of those big losses, and your profit loss ratio will improve because you're cutting out those big losses. And that in turn feeds consistency. Now, when you have better consistency, you've got a stronger track record, which improves your self-confidence, which then makes you feel more confident taking bigger share size, which means you're making more money. And this right here is a positive feedback loop. This is what I want to see you create. And I want to see you build this in a trading simulator before, of course, putting real money online. That's the right way to do it. Now, step 4 is when we get into technical analysis. Before you even look at candlestick charts, you should understand the statistics of a profitable trader, so you know what you're aiming for, and you know what to avoid in terms of that habit of selling your winners way too soon and holding your losers too long. So technical analysis is where we now get into the candlestick charts, and we start to get really dialed in with whether or not this is a stock that we want to trade based on the technicals. So when a stock hits our scanners on this side, we're looking at it based on our 5 pillars of stock selection. And we're checking our news feed right here to see what the headline is. All of that can check out, and then we pull up the chart and we don't want to trade it because something in the technicals on the candlestick chart are no good. And so then it's going to stop us right then and there. Now, what I'm going to do for you guys is I'm going to put a link. It'll be pinned to the top of the comment on this episode, and it'll also be linked in the description where you guys can get instant access to my small account strategy PDF. This is a strategy that's going to walk you through my trading plan, exactly where I get in, where I get out, my profit loss ratio targets, everything in terms of how you want to approach trading as a beginner. This is an excellent resource for you guys, and it's totally free. So make sure you guys download my small account strategy PDF. Now, in that PDF, I'm going to break down for you how I approach trading specifically when I'm doing a small account challenge, which many of you guys know I've done many of over the years. Now, let's see. Let me go back to the slide deck. So now, when it comes to the candlestick charts, I think most of you have probably tuned into some of my full-length trainings on how to read candlestick charts. If you haven't, I'll put a link at the end of this episode to one of those classes, which are a deep dive. But candlesticks are the universal language of the financial markets, and each candlestick communicates 4 pieces of information: the open, the close, the high, and the low. A green candle opens at the bottom and closes at the top. A red candle opens at the top and closes at the bottom. So candlestick charts are a historical record of what has already happened. And that is one of their limitations. They're looking backwards. So when we pull up a chart, we pull up a candlestick pattern such as this is telling us what's already happened. This is a whole dollar, half dollar setup, which is something that I really like to trade because I know that a lot of stocks run into resistance at half dollars and whole dollars. So in the case of SBET, up around $10 was where I had my first trade this morning. I took a break of 10 and my max loss, 10, and my max loss was just under $10. This was actually like 10, it was about 1025 or 1026 was my first trade. So about 5,000 shares, 1026, and was risking $1,300 on my first trade. So it's a half dollar, whole dollar setup. Now there's a few others that you can see right here. And each of these are patterns that I implement in my own trading. Now, if we pull up the charts here, we're going to jump into this chart on SBET. So I'm going to show you my very first trade from this morning. All right, so we're going to go back to the first trade from the morning. So when I sat down this morning at about 7 a.m., I already had SBET on watch, right? This was already a stock that I had put on my watch list for all of our members at Warrior Trading and for you guys that watch the YouTube episodes. And I had said that I was interested in it and we would see what it did. So coming into 7 a.m., it squeezed up right here. It dropped down, it then popped back up and dipped back down. So this is a setup that we call an ABCD pattern. So let me pull this back up. It was actually not this pattern, it was this pattern. So see how we pop up, we pull back, we pop up, we pull back, and then we go. This looks like a W. W's are for winners. So what we're looking for here is for it to break that level. Now, what's our max loss on this type of trade? The max loss is the low of this pullback right here. Because if this level breaks, then this is no longer stair-stepping up, it's now stair-stepping down, and we're breaking down and we're going lower. So it's very important that it holds that low. Now let's pull up the chart here on SBET. So this morning, this pops up right here to about 1080. It dips down to about 980. It pops back up to 1060. It dips back down to about 10. And right here, I said, you know what? I think I like this. And there's a couple of reasons that I like it. This stock right now, we are coming right into 7 a.m. And what I know is that at 7 a.m. Eastern Standard Time is when most retail traders come online. Retail traders at brokers like Thinkorswim, Charles Schwab, Thinkorswim, E-Trade, Robinhood. A number of these brokers don't allow trading before 7 a.m. on most stocks. There's a few they will, but most stocks not till 7 a.m. So I said, this is our leading gainer in the entire market coming into 7 a.m. This is the stock people are going to be watching. So I said, I'm going to go ahead and buy this. And so right down here, I ended up buying right here on this candle. As soon as this green candle broke the high of that red candle, we had our first candle that made the new high, right? So I wouldn't have gotten in if that candle hadn't made a new high, but it broke the high right there. Now, why didn't I get in right here, you might say? The reason I didn't get in right here is because it wasn't 7 a.m. yet. And I was worried there wouldn't be enough traders that were watching this or that were able to trade it even if they were watching it. So I was waiting until 7 a.m. It pops up, it pulls back right here. All of a sudden, boom, 7 a.m. So I bought 5,000 shares as my starter. That was my icebreaker position. Remember at the beginning of this episode, I talked about that icebreaker. So I bought 5,000 shares at $10.26 average. My max loss in my mind was that if it breaks below 10, I'm getting out, because if it breaks below psychological support, that's no good. So that meant on that first trade, I was risking $1,300. It ends up squeezing immediately right here. And as it broke through this level, I added. So I now add another 5,000 shares. So now I've got a 10,000 share position. But by the time I add, my stop, my max loss is no longer $10. Now I'm adding as it's going higher. What's my max loss? My entry point, my average cost. So now 5,000 plus 5,000, 10,000 shares, average cost. The average cost is my max loss. So if it goes back to there, I'm going to get out break even, which would be disappointing, but I thought this was going to work. And what was my next target? That it would break through this high right here, and it did. And right there, it ends up going all the way up to $11.32. In fact, as it squeezed higher, I added another, I think it was 5,000 shares. So I peaked at about 17,500 shares on this after my initial entry with $1,300 of risk. It goes all the way up to $12, and right there I made about $10,000 of profit. So now it pulls back a little bit. It dips down. I'm watching first candle make a new high. I got in right there for first candle make a new high. It could not break and hold over 12. I stopped out of that, and I had a small loss. I lost maybe $1,000. So it was a relatively small loss. It pulls back a little bit more. It dips down. And now we're kind of pulling back, and I don't like that we had this false breakout, especially on slightly higher volume. So I let it pull back a little bit more. And as we pull back, it ends up sort of basing out here, and then it comes back up, as you can see right here. And so right at this level, I got another little dip trade right there. So it popped up, it pulled back, and I got back in. But on that trade, I only made about 1,000. It kind of didn't go that high. So I got myself back to up about 10,000 on the day. And then it's going sideways. And then all of a sudden right here, boom. It goes from $12 to $35 a share. Unbelievable. So now we've got to zoom in on this on the 10-second chart. The 1 minute isn't even fast enough. So on the 10-second chart, you can see all of a sudden light volume, and then boom, volume is cranking. So it drops from about 12 down to 10. And so that was the spot where I was like, whoa, something's going on. I think there's news on this. It drops down and then it rips up. And by the time it popped up to right here and pulled back, I was able to see what the news was. And so at that moment, I saw, oh, got it. The news is a private placement. And with that news, I went ahead with $10,000 of profit on the day, and I bought 4,000 shares. I doubled to 8. I went to 12. I then went to 16,000. I then went to 20,000, and then up to 24,000 shares. 24,000 shares. And now it goes immediately up to 15. I'm up $50,000. It goes up to 16. It goes up to 17. I'm up 75,000. And I'm taking profit as it's going higher. It then comes up to 19 right here. And we get this sort of momentary hesitation, and then it pushes and it squeezes all the way up here to $35 a share. This was unbelievable. It was so strong. Now it ends up reversing here off of 35 and coming all the way back down to 19, which is a pretty substantial drop. And as it pulled back right here, I tried to buy a dip right here. That didn't work. It ended up going lower. I stopped out and took the loss. Goes a little lower. I did another dip off this double bottom here of about 20. It bounced up, pulled back for a second, comes a little higher, but not the clean move I was hoping. And then I started trading these breaks of 25. I felt like 25 was this critical level. So took a break of 25, it pulls back. And then I noticed we were starting to grind higher. So we kept kind of pushing a little higher, pulling back, and then we come up for another push higher. So let's back this up. So we'll go back to the 1 minute chart. We'll switch this over here, put it on auto. So we ended up having this sort of resistance area right in here. I'm just going to shrink this down a little bit. So we had this double bottom down here, ascending support and descending resistance. And so now I'm sitting and watching it right here. And as it comes up to 26 and it pulls back again, I'm starting to get dialed in on that zone. And when it comes back up the next time, it bounces off of this level and it breaks through right there. And that's where we got our next big move. Now, let's jump back onto the slide deck because I have a live trading archive that I want to show you. And I want to show you a couple other things as well. So when it comes to technical analysis, I'm trading candlestick chart patterns. And although a few of my favorite patterns include buying right around $half and whole dollars, the ABCD pattern, and this pullback right here, and I got a really nice pullback on this one, which I'm going to show you in just a second in the live trading archive. It was, I believe it was this one right here, or maybe it was this one right here, which was first candle to make a new high. Really nice moves. I'll show you that in a second. On this trade right there, I went I made about $75,000 on that trade. So I'll show you that in just a second. But while I really like trading these pullbacks, it's important that you understand step 5, which is how to actually execute the strategy. So candlestick charts are important, but as I said, there's a limitation in that they are looking in hindsight. They're telling you what's already happened. How can I make a prediction of what's going to happen next? And that's where I'm using level 2. So the level 2, and this is my level 2 window right here, this is the depth of the market. This is where we see our buyers on the bid and our sellers on the right. The first tier is in green. The second tier is in red. Here you see there's 2 orders at the same price. So there's 2 tiers. The third tier is in yellow. The fourth is in this blue color. And this helps me visualize support and resistance. So if I pull up SBET right now, you can see that currently there's one buyer at 37.75. But if we switch to Bank of America, look at how many buyers there are at the same price. So the reason they're all green is because they're all at the same price. So the more green you see at one price, you understand better psychological support. So this is a stock moving a little bit here, up 21%. This has one buyer and one seller. So it's a little more thinly traded. Now there's 2 buyers at the same price, one buyer at the same price, 1 and 1. Right? But now there's 3 at 27. Now there's 3 at 30, 3 at 32. So it seems like there's a little competition here on the bid side to bid it up. So when you're looking at the level 2, what the level 2 shows you are all the orders that are sitting on the bid and on the offer. People that are bidding to buy or offering to sell. And so if there's more sellers or there's particularly large sell orders, we interpret that negatively. We look at that and say, okay, we've clearly got resistance in this area. There's a big seller. So let's say, for instance, that I'm looking at a candlestick chart. Let's just say I'm looking at this, and all of a sudden down here I see a 200,000 share buyer. What does that do for me? Well, now all of a sudden, not only do I like the candlestick chart pattern, that gives me an additional level of confidence, because now you've got a big buyer down there. Or what if we had a 200,000 share seller right here? Well, see, now that wouldn't look so good. Now that would actually help me predict that this is not going to resolve because that seller is too big. So the presence of big buyers and big sellers can help confirm or potentially deny whether or not I should take a trade. Now, because these trades here are pre-market, I cannot use market orders. I can only use limit orders. But in order to make sure I get filled, I use a limit order with an offset above the current price. So I'm going to type in forward here just for the sake of it. And let's do something else. Let's see, CETX. All right, so CETX here. So I'm going to do 100 shares. I'm going to put an order right here to buy 100 shares, and I'm going to click the buy button. So this is a limit order, and I'm going to fill right there at 186, right? Now, if I want to sell at 186, I'm going to put my sell order on the ask, but notice it's just sitting there on the ask at 186. I have to wait for someone to come and buy those shares. It's a limit order. So when you use a limit order, you can use limit orders to buy immediately or to sell immediately, or you can use them to sit and wait. I could put an order down here to buy at 66, and my order is going to sit and wait and wait. So if someone puts an order to buy, 100,000 shares or 1,000,000 shares, and it's sitting there at the bid, we interpret that as someone who wants to buy the stock and they want to buy a pretty big position, and that's bullish. We see a big sell order, we interpret that as bearish. Now, when I'm trading, if I want to get in and get out, I don't just buy at the ask. I actually give myself usually a 10-cent offset. So I buy at 96. The reason I do that is because let's say I want to buy 2,000 shares. How many shares do you see for sale right here? We see 300. So just for the sake of it, I'll just go ahead and buy this. So I bought it, my order went through, and I filled at 86 and 87. So the price moved up about a penny. Now, if I want to turn around and sell it right here, I've got to sell at 85. If I sell this right here, I don't know if I'll sell the whole thing at 85 because I don't know if it doesn't appear that there's enough shares. So now it's even gone down a little bit. So 84. So let's say I put the sell order at 84. Let's see. So it actually accepted all 2,000 shares. So that means there was a buyer there, and I'm going to sell the remaining 100. So in that case, it worked. But what I typically do is I use an offset. So I sell 10 cents below the bid, and I buy 10 cents above the ask. That's what I'm getting in and getting. Well, typically what I do is when I get out, I actually try to sell at the ask to get the best price. But pre-market, you have to use limit orders. You cannot use market orders. And with most brokers, you have to make sure your order is an extended hours order, whereas a day order is only 9:30 to 4 p.m. That's true with most brokers. So you've got to make sure you set up your orders correctly so you could trade pre-market if you're wanting to trade pre-market. And I do. Why? Because pre-market is when companies are typically putting out breaking news. So that's when we're seeing these big moves. It's not during regular trading hours. It's during the pre-market and after hours trading sessions. So I'm utilizing the level 2 to help me understand where there are buyers and sellers. I'm utilizing the level 2 market data specifically for that. And I'm using the time and sales to help me see all the orders that go through. Those are the transactions. Every order that goes through has to appear on the time and sales. That's a regulation. So I see all the orders that go through. So now, while I'm trading, I'm using level 2 to give me more insight into what's happening. So right here, I'm sitting up $109,000 on the day. So I'm going to do a little live archive for you here. So we already got our first pullback, and now we're about to get our second 1-minute pullback. So this is starting to pull back here. I put my mouse over that candle right there to mark out the current high, which is 2964 of that move. So I've marked out the current high. All right, so now I know the high of this level, and I know the high a day, which is $35 a share, and I'm watching for the first 1-minute candle to make a new high. Now, one of the challenges with this stock is that we have larger spreads, $29.34 by $29.41. So what I'm going to end up doing down here is I'm going to end up taking a starter. We're going to let it pull back. So we pull back, and then right here, we're going to look for first candle to make a new high. So it's going to be right here. So right there, I've got my starter. And as it popped up, you could see right there, this was that dip. So I got my starter right down there. It popped up, and I got a little bit of profit. So then it comes up a little bit higher. So now I'm at 118,000. It dips down, and I add here at 32. Now it goes up to 33. I'm now up 144,000. It goes up to 36. I'm at 154,000. It's going to dip down again right here. And I'm going to get one more trade up to, it's going to pull back for a second. And then it's going to curl back up right here off of ascending support. So this is an inverted head and shoulders pattern. So this is the shoulder right here. And we're going to look for that to squeeze back up. And so I end up adding right here. And we get that move up to 163,000 on the day, 173, 182,000. That was my peak. And then off that peak, I gave back a little bit and finished right there at 175. So going all the way back to here, this initial trade right here was first 1 minute candle to make a new high. So right there, we got the first 1 minute candle to make a new high. And because it's got bigger spreads, I jumped in and I got some profit. So I got some profit on it, and then adding back, next trade, micro pullback, adding more. So that sent me from 109,000 on the day all the way up to 150. Then I lose 3,000 off the top. No, sorry, I topped at 154 and I lose 6,000 off the top. It pulls back on that red candle. Then we get the next setup, which was the inverted head and shoulders right here. And there we get that squeeze up through the new high up to 38, which was the high at that time. And that parked me at $175,000 on the day. Now, in order to be able to trade stocks like this and get to that level, I had to spend a lot of time, step 6, analyzing my metrics. My metrics are so important to me. They tell me where I trade the best. And by understanding where I trade the best, I know where to lean in. I can also look and analyze individual trades where I was trading them, where I was getting in, where I was getting out, so I can better understand what I'm doing that's working and what I'm doing that's not working. So by regularly checking my metrics, I'm able to make improvements in my trading. So the software that I use, which I don't have any affiliate relationship with, this is just software I've been using for a long time and I think it's great, is called TraderView. And so I've been using this for 10 years. I've been importing every single trade for 10 years into this software. And so if I close this out here, this is going to be about, let's see, we can compare win versus loss days. So this is a total of, let's see, 1,780 winning days plus 400 losing days. So we're at 2,100 trading days. And there's about 240, 250 trading days in a year. And of course, some years I've had some no trade days or taken vacation or whatever. So over 2,000 individual trading days right here. $20 million in profit, $3.4 million in losses. And when I go through all of this data, this can show me where I make the most money, the times a year I make the most money, the types of stocks I make the most money, the times a day I make the most money. And so, it's not a matter of opinion when I share with you my 5 pillars of stock selection. Those 5 pillars of stock selection are based very clearly on my own data. I data mine that. Now, in order to take my trading to the next level, I've had to have a couple of breakthroughs. And something that I'll share with you is that I always tend to have breakthroughs after big red days. So if you're having a big red day today, or you've had one in the last week, or maybe you have one a week from now, think about it as an opportunity to turn that loss into a lesson. So here's what happens for me. I take a big loss and I feel so frustrated and disappointed in myself that I end up pulling up my metrics. I'm like, I need to get to the bottom of what happened here. And so I had this epiphany a few years ago. I had this belief that my success depended on hitting home run trades. And I would argue with you today that I did not have home run trades. I had a lot of base hits, a lot of really good base hits, $20,000, $30,000 base hits. But those weren't home run trades. Those were me jumping in and jumping out, granted, with relatively large position sizes. I'm comfortable taking 15, 20,000 shares, even on more expensive stocks, because of my track record. I have one of my students who's done extremely well. He's got his $1 million badge, and he's more of a home run trader. He'll take a trade like this with 30,000 shares, and he'll hold for 10 points, and he'll have $300,000 winners. His biggest green day is far bigger than mine. I mean, he really trades at another level. He doesn't jump in, jump out, jump in, jump out. He gets in, he holds, and he lets it work. And I have so much admiration for that, but I can't do it. For me, I'm jumping in, I'm jumping out, I'm jumping in, I'm jumping out. I'm just actively trading it. But what I have that he doesn't have right now is I am more consistent. I make less money, but I'm more consistent. And I'm more consistent because I don't take big risks. So I don't have big drawdowns. I don't have huge red days, rarely. I'll have red days, but they're not huge. So I'm more consistent. And I actually made a very strategic choice in my trading that I would rather be more consistent, even if I made less money, because it was more tolerable. So, but for a long time, I had this belief that I needed to hit home run trades where I would make like 100 grand in one trade. And that belief led me to take huge risks in hopes of hitting home runs. But the thing with taking huge risks is that invariably I was having huge losses. And then after a huge loss, I wasn't going to make back the money with small little base hits, right? So then I got in this cycle where I needed to hit home runs just to recoup the losses. So I felt like I was on a negative cycle. The winners, yes, the home runs were great, but they were typically offsetting losses. So after I had a particularly bad loss, I decided to analyze 10 months of trading data, 10 months. I looked at my top 25 biggest winners, and they amounted to $215,000 of profit. And my top 25 biggest losers were $200,000 in losses, which means if I looked at just my top 25 biggest winners and losers, I'd only made $12,000 in 10 months. And I knew I'd made a lot more than that. So I was really kind of confused. I was like, wait a second, then where's my profit? So then I looked at winners of more than $4,000 and I'd made $319,000. And I looked at losers of more than $2,000, which for me was a big loss at the time. And I'd lost $361,000, which meant when I only looked at winners of more than $4,000 and losers of more than $2,000, I was at a loss of $42,000 over 10 months. So basically I was looking at this bell curve and I started with the two most extremes of biggest winners and biggest losers. And then I brought it in one more kind of standard deviation right here. And so then what I discovered was I got to look at what's in the middle. And what I discovered in the middle was that winners that were base hits between 0 and 4,000 amounted to $500,000 in trading profits. All those base hits added up. There were hundreds and hundreds of trades. They added up. And losers between 0 and 2,000, small losses, only 156,000, which gave me a net profit of $354,000, which now told me that I would have actually made over the last 10 months, $42,000 more money, even if I never had a winner of more than $4,000, as long as I also didn't have losers of more than 2,000. And this felt very confusing to me because it felt like the opposite of what I should be doing. I felt like to be a better trader and to make more money, I needed to set larger daily goals. And in fact, I needed to be content with more consistently walking away with about $2,000 a day. $2,000 a day is $500,000 a year. Yes, I was having some $5,000, $6,000 green days, but then I would have $8,000 and $10,000 red days because I was being too aggressive. So that taught me to bring everything down to focusing on base hits. And when I say base hits, I mean when I have 15, 20 cents per share of profit, I usually take that profit off the table, with the exception of when I have it in an instant so fast, and then I wait until I see a valid exit indicator, which would be weakness on the level 2, selling on the time and sales, or a psychological level like a $0.50 or a whole dollar. So on really strong stocks, I may get 50 cents or even $1 a share, but I never get $5, $6, $7, $8 a share. That just doesn't happen for me. So the result of this base hit strategy has been more consistency, more confidence, and a calmer disposition. And I can tell you, looking at my trading just from this year, this is my calendar for this year, for so far this year, not including today. How many red days do you see? Not very many. Let's look at the end of last year. In fact, in the last 7 months, I've only had, that was 1 red day, 2, 3, 4, 5, 6, 7, 8, 9, 10 red days in the last 8 months, approximately. That is really solid. So I've become a much more consistent trader. And becoming a more consistent trader is a combination of everything that I've shared with you here. It's the ability to find stocks in real time, the ability to perform fundamental analysis, to do risk management, to do technical analysis, to execute the buy and sell, to analyze the metrics, and to keep improving. It doesn't happen overnight, but it's a journey, and you have to keep working at it. Now, I would say every single day that you're showing up and you're watching episodes like this, you're learning. Give yourself that time to learn, to gain experience. And I encourage you to practice these new strategies you're learning in a simulator. So if you want to take the next step and continue learning, here's what I'm going to do. I'm going to give you a 2-week trial at Warrior Trading. It's a 2-week trial for 20 bucks, which means you can watch over my shoulder while I'm trading. And during that 2-week trial, you can even use this same software that I'm using. It's $20, and that just helps cover your real-time market data costs. I actually lose money on the trial, especially when people straddle a month, which they do often. And it's not a big deal. I don't mind losing some money on it. I reinvested my day trading profits into building this software because this was software that I wanted for my own trading, but there wasn't something else out there like it. I wanted to build something that would be an asset for every active trader trading momentum like myself. So I'd love to give you guys a chance to test out this software and see what it's like. So the link for the 2-week trial is posted in the top of the comments, right next to the link to download my small account strategy PDF. And if you guys enjoyed this episode, do me a favor and hit that thumbs up, subscribe to the channel. And if you want to watch a couple other full-length trainings, I'll put them right here and right here. So as always, I hope you enjoyed this, and let me remind you, trading is risky. My results aren't typical. So trade in a simulator before putting real money on the line.